here's the big question. You're interested in value investing and valuing and evaluating businesses on a deep level, but you don't know how, even after researching for hours, probably dozens of hours, hundreds of hours on the internet, and because nobody else shows you how to do it. This podcast has all those answers and much more about value investing in finance. My name is Jason Rivera. Welcome to Value Investing in Your Car. Hey, Jason here. In this episode of Value Investing in Your Car, I want to talk about, I'm going to do a book review of the book, The Signal and the Noise. Before we get to that, though, I have to remind you that Value Investing Journey in Your Car is now available as a podcast on all major podcast platforms, Stitcher, SoundCloud, Anchor, Spotify, iTunes, and others. All major podcasting platforms, you can now get this podcast for free anywhere in the world and listen to value investing content and learn on the go. Okay, so I'm reviewing today the book The Signal and the Noise by Nate Silver. If you know anything about Nate Silver, you likely know that he is huge on forecasting things, huge on statistical modeling and predicting things like presidential races. He used to be in baseball quite a bit. I don't know if he still does anything in baseball or not. But what he's mainly known for now is political kind of forecasting and forecasting on things in the political arena. So this book is all about statistics, probabilities, forecasting, and Bayes' theorem. Bayes' theorem essentially is a way to not necessarily predict things, but help forecast things based on logical information that you have. If you don't know what Bayes' theorem is and you never heard of it, you should look it up. Incredibly fascinating. And we all use it pretty much every day in our decision-making process, and will help you if you learn more about it, help you learn to make better decisions as well. He talks about the difference between predicting and forecasting. Predicting is giving like a specific date and time something's going to happen, and one of the examples in the book is predicting earthquakes, which it can't be done. And forecasting gives a range of potential outcomes. So why is this important for value investing? Obviously, we have to think in probabilities anytime we value invest or buy a stock or sell a stock. Is it a probability? What is the approximate possibility or probability that this XYZ stock is going to be a great long-term buy and hold investment for 5-10 years? Is it greater than 50%? Is it closer to 100%? Is it below 50%? Should I sell this investment? What is the likelihood I'm going to lose money if I don't sell this investment? Again, the complete opposite. Is it 25%? Is it 10%? Is it 75%? Whatever it is. Margin of safety as well. Valuations. I don't pick a specific dollar amount that I say this company must be worth this money or it's a failure or whatever. How I word things is it should be this is kind of the range, low, medium, high, what I view this company to be worth based on today's information. Fantastic book. It did get a little bit redundant for me because I've studied a lot about Bayes' theorem and probabilities and statistics over the years. So I'd probably give it a 4 out of 5 just because it was redundant to other stuff I've learned from before. But if I hadn't learned much about Bayes' theorem or probabilities or this kind of logical kind of forecasting before, I would have given a 5 out of 5. As deep value investors, we have to think logically about what we're investing in. When we're selling it, is our analysis based on logic? Is our analysis based on real world factual things, or is it based on emotion? All those kind of things. and much more. And this, if you get, I wouldn't say good at Bayes' theorem, that's probably not the right word to put it, right way to put it. But if you get good at thinking in Bayes' theorem ways and probabilistic ways, you'll become a much better value investor. Why? Because again, or here's another real world example for me, actually, now that I think about it, is I've been saying the market's overvalued for almost 8 years now. I still think it's overvalued. It's even with the drop in end of last year, was it November, December, the stock market dropped quite a bit. I continued to get questions, is this a buying opportunity now? No. Why? Because in my opinion, based off my knowledge, my experience, what I require from every specific investment, I require a large margin of safety for every investment I invest in, unless it's just a spectacular company that's about fairly valued. Based on my knowledge, my experience, and my conservatism and what I require from an investment, the stock market is still massively overvalued. Which means most individual stocks are still overvalued. And I think there's a far higher likelihood that the market is going to crash by 25 to 50% in the relatively short term, let's say under 5 years, than it is of going up another 25 or 50% over the next 5 years. I think there's a far higher likelihood of that happening, of a market crash, than a market rise by that amount in the next 5 years. 2 to 5 years, or 1 to 5 years, whatever you want to put it. I don't know if you have to put a specific number on it, but the way I word it to people is there's a far higher likelihood of a market crash in the kind of short to medium term, again, now to 5 years from now, than there is of a 50% rise in the stock market in that time. And both could happen. I think it's far more likely that a crash will happen faster. But again, it could rebound from there and go up from there. So you have to think kind of probabilistically about these kind of things, individual investments, stock market, all that kind of stuff. So margin of safety and valuation. Company XYZ is worth between $15 a share and $25 per share, and I can buy it at $10 per share, then it's massively undervalued in my opinion, based off that kind of margin of safety principle. And those probabilistic thinkings. So I hope this kind of explanation helped a little bit make you think about probabilities and statistics. I always have a hard time saying that word. And Bayes' theorem. And again, if you want to become a great value investor, you have to think about this kind of stuff. Where am I? Do I have a higher probability of company XYZ in my portfolio that I already own earning a higher return than company ABC that I'm thinking about purchasing? There's another way to think about it as well. You can apply this to pretty much everything. So, excuse me. So I hope this helps. Again, if I hadn't learned as much about Bayes' theorem and probabilities over the years, I would have given this book a 5 out of 5, but because it was pretty redundant after the first probably quarter of the book is pretty redundant, to be honest. I mean, there were different stories, of course, and examples that I learned from, but the kind of general concepts were very redundant after about the first quarter of the book. For me, again, because I've learned quite a bit about this. So for you, it might be different, and you might get even more out of it than I did. But having said that, I recommend the book, especially for people like us, deep finance, deep value investing type people. And I hope you enjoyed. If you read the book, let me know in the comments below. I'd love to hear your thoughts on Bayes' theorem as well and how you use it. Kind of not necessarily the actual theorem where you put in one number, you put in another number, and that kind of spits out the probability, but how you kind of think about probabilities as you think about an investment. I'd love to hear your thought process on that. Remember, you can get this podcast anywhere in the world for free on all major platforms. If you're watching this on YouTube, make sure to like, love, share, subscribe, and comment on the video, and I would personally reply to all comments, questions, whether it's on the blog, whether it's on the YouTube, whatever it is. So until then, until next time, I hope you enjoyed this. Hope you found some value of it, and we'll talk again soon. Thanks. Bye.